Bond market flashing a warning signal for stocks. The practical market read kept the tone centered on software and consumer staples. Welcome to your daily market briefing for 2026-07-27. We will walk through leadership, macro context, and what matters next for the next session. Here is the broad market snapshot. S&P 500 was up 0.02% and closed at $7,413.18 US. Nasdaq 100 was down 0.32% and closed at $28,039.21 US. Dow Jones was up 0.51% and closed at $52,210.08 US. Next, the ETF curve set shows where relative strength and weakness developed through the session. Leaders were software plus 3.30%, consumer staples plus 1.45%. Laggards were energy minus 2.08%, utilities minus 1.35%. Across global markets, the session leaned constructive globally, with most major regions holding up. United States was one of the weakest pockets in the map, while Shanghai in Asia held up better than the rest. Stepping back, broad risk tone was mixed, with SPX at plus 0.02% and NDX at minus 0.32%. Relative strength stayed with IGV, XLP, while XLE, XLU lagged the board. The stock market fear and greed index is 40, which sits in fear. That points to a cautious tape where traders still want confirmation before adding risk. Daily market history shows 4 of 4 core ETFs above their 200-day averages. S&P 500 ETF has the strongest 20-day trend at plus 1.39%. 0 core ETFs are within 1% of a 52-week high. This is useful because a close near highs means something different when the same symbols are also holding above longer-term moving averages. Volume data shows 0 tracked symbols trading at least 20% above their 20-day average, while 4 were at least 20% below normal. The strongest participation signal came from NVIDIA at 1.11 times normal volume. I treat this as a confirmation layer, not a standalone signal, because price can move on thin activity, but follow-through usually needs participation. Among mega-cap leaders, Apple had the strongest 20-day trend at plus 18.72%, while Amazon was the weakest at minus 0.56%. That helps separate index-level strength from the actual mega-cap stocks that often decide whether the move has durable leadership. On the S&P 500 heat map, leaders were software plus 3.30%, consumer staples plus 1.45%, laggards were energy negative 2.08%, semiconductors negative 2.05%. Policy expectations remain a major driver, and upcoming macro releases is one of the next data points traders will use to calibrate the Fed path. If that data surprises hot, long-duration trades could stay under pressure. Commodity action was split. Gold led, while crude oil lagged, so the move looked selective rather than broad-based. The index board leaned lower, with Nikkei carrying the weakest tone and Dow holding up best. Mega-cap curves were mostly negative, which points to a broad tone move more than a single name story. Forex showed a risk-off currency tone, with the sharpest move in GBP USD and the best relative strength in AUD USD. Crypto remained under pressure, which helps confirm the broader market risk tone. Bond curves suggest yields were mixed to lower, so rates still mattered for the session. The main focus stayed on leadership, stayed concentrated in software and consumer staples. The pressure point remained energy and semiconductors. For tomorrow, watch the next macro events, the direction of Treasury yields, and whether leadership stays with semiconductors and energy or rotates elsewhere. Also watch follow-through on bond market flashing a warning signal for stocks. The practical market read is that conflict headlines often hit energy pricing and the market's appetite for risk, because headline risk can quickly reshape sentiment. That is the key takeaway for today's market. Broad risk tone was mixed, with SPX at plus 0.02% and NDX at negative 0.32%. Relative strength stayed with IGV, XLP, while XLE, XLU lagged the board. Keep watching policy signals, index leadership, and the next macro catalysts.